What's going on, everyone? Welcome to the Rise Real Estate Investing Podcast with your host, Mayu Thaba. And
Austin, yay.
going on, everyone? I'll speak for both of us right now and say we have had a fucking exhausting week on one of our loans that is not really going as it should be. And we're probably going to take a little bit of an L on this one. But I think more than the actual monetary dollar value that we've lost a lot of fucking man hours and a lot of energy and just time on this one. So, lesson for everyone out there, if the returns are high, you need to know that you're probably signing up for some high risk loan as well, right?
Yeah, we knew that getting ourselves into this anyways, right? So it wasn't a surprise to us. I'm just happy that it is not multiple investors. I mean, like it was me, you, and someone else who partnered together to provide this loan. Not going in it alone. You know what I mean? Like at least we're all fighting through this together. We're bouncing ideas off of each other. We're connecting with etc. It just, if I was doing this alone, I feel like my mood would be very low.
For sure. You fucking dragged me into this shit, eh?
I did not drag anyone into anything. Don't do that.
But what have you been up to, Austin? I know you are you allowed to talk about the property you guys have locked up, or
we didn't end up locking it up. So what ended up happening is basically I put out 2 offers this week on multifamily properties. I'm trying to get them below $100,000 a unit, or give or take around $100,000 a unit. Not going to disclose the city, but it's a decent little city, good population size, future potential for growth. The multifamily space is quiet. I didn't think we're all aware of that. But usually the multifamilies that are listed, I find, are not in the best locations. So there's 2 properties that were located in amazing locations. We threw in preemptives and we were bidding against, I think it was like 2 other people. Everyone ended up bidding below 100K unit. I was the only person that offered 101 or 102K unit, something like minusculely higher.
Was Bully rough?
No, I mean, there's no appetite. And it was fully tenanted. So only a handful of people were able to get into the property as well. I think it was only three realtors that were allowed in because it was so hard to coordinate everyone else. And I think the realtor got tired and said, screw it, we're just going to take whatever offer. So then, there was a couple of bids. No one was highballing or even offering what it should be worth. We were all sort of lowballing. What ended up happening is that someone went in clean at below 100K unit. And then they ended up accepting that offer. But they didn't actually accept the offer. We're told they accepted it. They countered that person with my price, but mine was conditional. And they said no. So then they came back to me and said, hey, do you want to get a deal done? And I was like, okay, let's get a deal done. And then they said, never mind. What we're going to do is we're going to relist it, push the offer date another 2 weeks to give people time to go through, and then take highest and best offer at that point. So I think they knew that they could probably do much better than what we provided, and now they're willing to be a little bit patient. They've owned both of those buildings. So I put offers on both of them, and at least verbally I was told by their realtor, hey, yeah, this is good. Like, we should be able to get it done. And then none of them ended up getting done. So I'm stuck with nothing.
They're playing some fucking games, eh?
Yeah, they're playing games. And I told them I'm not even going to bother putting anything on offer date, so it's fine.
Yeah. Well, the two, let's not call it out yet, just yet. We'll see. We'll see how things describe.
What I'll see, man, is that if there's no offers on offer date, that there was something in, right? But like, I'm not going to go and compete with a bunch of other people now. It was risky as it is because everyone was 50% below market value. So even though the price per unit is amazing, it's not going to cash flow on day one.
Yeah. That's crazy. These rates, at 100K a unit, if you can't cash flow. And I'm assuming, we don't want to talk too much about the building and the details, but assuming it's not like studios, like that's kind of pretty fucking sick if for a decent.
Yeah, and the location, man, like the location was A1 for that particular city. And also, again, like there's never multis that get listed on there. When you think before, in peak COVID, which you can't compare anything to peak, but I'm going to do it anyways. Things are selling at 200,000 plus a unit, 300,000 a unit. So it's crazy that now, some buyers who are rational are willing to entertain a lower offer.
Yeah, and I think more importantly, it's a cool environment to like make offers. Like you can make like sensible offers, right? You don't have to be irrational about it, which is why I like it as well. I literally sent another realtor message just saying, hey, like I'm buying very similar criteria to you, but I haven't put it out there for everyone else to kind of have the same criteria, right? But we're buying shit that basically makes sense and has lift. right? Like at a high level, that's how I'd kind of like summarize it, right? If it doesn't make sense today, we're not buying it. If there's no lift in it today, then why are we even buying it, right? But we'll kind of wait and see and how that kind of plays out. We're also closing, hopefully soon, a very small like business investment that I told you about, Austin. But once that's finalized, we'll be a little bit more public about that. It should be finalized this weekend, and we'll go from there.
Awesome. Anything else that we need to chat about? Or other than that, I feel like our entire week has been taken from that private loan.
Yeah, it's fucking waste of time. But all right, guys, let's jump into our episode this week. We've got Zac Willms on. He is a commercial realtor, which is always really good kind of conversations with commercial realtors. He does investing as well, and he's partnered up with a predominant investor as well on the Glamping resort side as well. So we do touch on that, but we also spend a good amount of the conversation just talking about what we're seeing in commercial real estate, kind of the future of development as well, I believe, in the episode, changes on kind of like investing approaches, seller expectations, buyer strategies, what's working, what's not, CMHC, the impact that that's had on this entire commercial space. So in line with our preamble, if you guys are evolving along with us, you're probably looking at commercial real estate deals as well. Definitely a great episode to get kind of a crash course on the reality with boots on the ground information. Hope you guys enjoy the episode. As always, if you do enjoy the episode, make sure you guys drop a 5-star review on whatever platform you're listening to this on. But more importantly, share the podcast with a friend. I don't think we've ever celebrated this, but we've crossed just north of 300 and something thousand downloads, which is a great accomplishment. But we want to keep the podcast going. So as always, guys, share this with a friend if you find this useful.
Hello, everyone. We are joined with our very special guest, Zac Willms. Zac, thank you so much for joining us today.
Awesome, guys. Thanks for having me. Looking forward to it.
For sure, Zac. So as we already kind of game plan this episode out, we're definitely going to be doing a deep dive into the commercial real estate world. But before we do that, for anyone that doesn't know you, why don't you give us a quick rundown on yourself, who you are, what you do, your investments, and your kind of journey to date?
Yeah, for sure. So basically right now I'm a commercial real estate focused agent. I also call myself a lifestyle entrepreneur as I love living a good life while running businesses, while investing in real estate and running the real estate agent business. So I started off investing back when I was 20 years old, buying a single family home, did it as a student rental, went into the duplex world, triplex world, did a couple of different burrs, bought some multifamily, and then really kind of fell into the short-term rental space. Ended up buying a campground up north in Tulum with a few partners, turned that into a glamping business, and we bought a little cottage resort. Then I decided to go buy some land out in Mexico in a city called Tulum because I thought, let's go build a really cool villa down there and make an amazing space and amazing experience for guests to come to. And that really, I found, combines my passion of traveling and exploring the world with real estate. Right, I still love real estate. I still have a lot of my long-term rental portfolio, but I love the short-term rental side combined with experiences, combined with the travel and the lifestyle piece that you get out of it. So that's kind of been my focus over the last 2 years here.
I love it. Too many times as investors, we look at maximizing ROI, right? But you could also theoretically grow your wealth while enjoying the fruits of your labor, and you're showing exactly that.
Exactly.
Maybe we talk a little bit about the commercial space and then we can get into your growth on the investing side. So how long have you been a commercial broker for, and how has that world evolved since when you got started to today?
Yeah, it's evolved a lot. So I got started in real estate. You just go right back to the beginning. I got started as a real estate agent 6 years ago. And then about halfway through, I transitioned into fully commercial real estate by joining a commercial brokerage and just going all in on commercial apartment buildings, land development, and everything that kind of spurs from that. I always knew when I got started as an agent, I wanted to go into commercial, but I had to get all my records done in residential, feel out all these deals, really understand the whole process of the business. So when I got started, I think 3 years ago in commercial real estate, times were crazy. People were putting offers on buildings without conditions, no environmentals, closing cash, 30 to 45 days. It was a nightmare to do deals. And it was also a nightmare as an agent to value properties, right? When sellers are coming to us being like, what's my property worth? It's like, it's going to go into 5 or 6 offers. It's going to sell like a hot cake on a cold day. Who knows, right? And so really what people did in commercial back then is they just put everything unpriced. Everything came to the market off price. People would just go put in bids, and it was really difficult for an agent on either side, either on the listing side or on the buyer side. Because you got to think, if you're on the buyer side representing your client, how do you tell them to go put an offer in way, at a number that hopefully makes sense against 8 other offers without environmentals, without BCAs, without appraisers, and closing private. Super difficult, right? And when you're on the listing side, how do you manage the seller's expectations on where the pricing should be, right? When the seller comes to us and like, here's my building, how much you think it's worth? We give them one number. They're like, wow, I want my number like way up here, right? Because the market's crazy and hot. And it's like, well, based on numbers, it doesn't make sense. Once we put it to the market, we'll see what happens, right? And a lot of times they were hitting numbers that we never even thought were possible.
I guess this would be 2020, 2021 timeline, and commercial cap rates were in 2020 just starting to come down, right? I think early 2020, like at the beginning of COVID and all that stuff, you had different risks of like tenants potentially not paying you rent and stuff like that in these commercial buildings. But or if you had retail clients, they were really struggling and all that kind of stuff too. But then as things kind of picked up and recovered, then it was really cap rate compression happening live and kind of chasing that, I guess, ride up or ride down if we talk about cap rates or price, right? But okay, so do you predominantly do a lot of like multifamily commercial properties, or are you in the other asset classes as well, like retail, industrial, office, stuff like that?
I'd say main is apartment building, second's land, and then the third is kind of the industrial retail plazas in terms of my business scope.
So let's talk about existing commercial first. You know, jumping into today's market or over the last like 12 months or so, what have you been seeing in the commercial like multifamily space? And do you only Ontario or do you do across Canada?
Just Ontario. Yeah, just licensed in Ontario. And it's basically a full 180 from what I just explained, right? Where people are closing cash 30 to 45 days. Now it's the exact opposite. People are really only closing with CMHC. You know, you're going into a conditional period of like 60 to 90 days. You're closing another 60 days after. Like the life cycle of a commercial deal now is like 6 to 8 months. So if we put a deal together now, we're thinking like 6 to 8 months from now is likely when everything is going to get finalized, right? So it's completely different. Right now, really the main thing that's selling is just, I call it boring real estate. It's real estate that you can take directly to CMHC and you're going to get the best financing on the market at the lowest rates. And it's going to be a slow process, but it's going to be the best way to buy a building. Right? Going into these bridge loans that you see today where people are still looking to do value add on apartment buildings, I'm telling you right now, those deals are so few and far between compared to what they used to be. I used to be the only stuff that sold, right? Under market rents, underperforming assets. Everybody was buying them, private money, and trying to make it work. Now those deals are so much harder to underwrite because of the increase in bridge loans, because of all the rules with CMHC in terms of what you actually refinance out those bridge loans, what you do with the money, all the gray area with that. It's been a lot more difficult to sell those types of properties.
I will say, I think a CMHC today, correct me if I'm wrong, Mayu, they said that they're removing the 2-year refinance period, right? And so that sort of alleviates that issue. But I'm just curious. So in terms of like these properties that people are picking up, you say that they're taking it directly to CMHC. Are they like assumable mortgages, or are they like how are they qualifying with CMHC, I guess, like right off the bat?
Yeah, typically they're just going straight to CMHC, getting anywhere from like 70 to 80% loan to value on a CMHC standard mortgage. Like the properties have actually come down to a point where deals are actually making sense for somebody with like good financing, 40-year amortizations. Let's just go right to CMHC standard, do a slow turnover over the building over the next 5 years, 10 years, and we'll get that turnover that we're looking for, right? But it's not the cash for keys coming in there, guns blazing, let's try to kick everybody out and refinance. It's let's spread this across 5 years and be smart about it, and realistically way less risky than what was happening before in 2021 and 2022.
Right.
I think the way these commercial properties are being funded now are also like funded from the equity side, right? It used to be like 1-2 like partners kind of buying the stuff up together. We're seeing a lot more like MFTs essentially, right? Or small private REITs come in and pick up a lot of these asset classes. So is that kind of what you're seeing as well? As it's a lot of syndicated like equity structures added onto a CMHC mortgage, which then allows and supports like a 5-year timeline.
Yeah, exactly. Syndications are probably the number one way people are doing it. GPLP structures, right? Raise the capital on the LP side. It's a 5-year term anyways, and they're going to then make a good return after 5 years, right? We still see some private investors going in there and having the 20% to get there. But even when they don't have that money, trying to do VTBs, you know, before all these rule changes came in, I don't know if the rule change today mentioned anything about a VTB and refinancing that out. I know they talked about the bridge loan. Did they talk about the CMHC refinancing out of VTB too.
Seems like they're scrapping the entire thing so that you could even pay back the renovation funds if it's like secured against a property and stuff like that, which is really good. You know, like really, really good. But then they offset that really good news with the
very bad news.
with the energy efficiency stuff that they're now scrapping as well, right? But like exactly like what you're saying, like people aren't necessarily going MLI on the buy; they're going CMHC standard on the buy.
Correct. Yeah, exactly. Right. That's typically how we're seeing most of these assets traded, where they have to come down to a price and a cap rate based on how it's operating right now that they can go to CMHC with. Like I said, anywhere from like 70 to 80% loan to value is kind of what we're seeing. Anything under that, they're probably just going to sit there. If it's sitting at 80, 81% loan to value, typically buyers are looking at that as a good asset.
How about on the seller side of things? So, I mean, we always touch on the buyers and what they're looking for, and we're always aware buyers are looking for the best deals. Have sellers loosen out their criteria and be willing to let go of these assets at discounts, or are they pretty stubborn?
You know what? It's so hard. I'd say it's 50-50, right? Some of them are understanding what's happening in the market. They're seeing the writing on the wall. They're frustrated, I'd probably say, by a lot of the stuff happening in Ontario, and they're willing to kind of bend a little bit to let go of it, to maybe take that money somewhere else. Right? The other 50% are like, absolutely not. You know, we're holding on for the long run. If you can't sell this asset for XYZ price, I'm not selling it. I'll keep it. I'll hold on to it for another 6 to 8 months. But there is some that I think have just kind of come to their end with all the stuff that's happening. And even today, like the rule changes of, here's what the rules 6 months ago, now all of a sudden they're changing. How do you have a strong business plan when things just continue to change at this rate? Like, it's really difficult to sit there, even as an agent, and tell somebody, yeah, this is the plan, you're going to buy it, here's what you're going to do to make your money. When all of a sudden, 3 months, 6 months later, everything starts changing again.
Yeah, no, I agree. Like that change on energy efficiency could really cripple a lot of people that were banking on getting to the 100 points and stuff like that, right? And I don't know too many investors that really want to commit to affordable housing unless you're in the nonprofit side and YWCAs and those guys that do that stuff, right? But so with that being said, like, what's your outlook on commercial multifamily?
Yeah, it changes it every day, right? Whenever these world changes come out, it changes. Whenever the bond rates move, it changes. Like, it's ever evolving. And, you know, I love the question, because if you hear me a week ago or 2 weeks ago, it probably sounded completely different. But things look positive. Like, the market's definitely picked up, I'd say, over the last 3 to 4 months here. We're seeing a lot more action on all of our listings, a lot more offers, a lot more workable offers, not things that are just like way under market value that, you know, are not going to trade. We're starting to see a lot more activity pick up, right? But all these rule changes make a huge ripple effect throughout the industry, right? Bond rates make a massive ripple effect throughout the industry. So this will take at least a week or two to kind of let the dust settle, let everybody figure out all the little loopholes in these different rule changes to see where the new opportunity lies. Why our job is so fun.
Yeah. Pair that with a potential rate cut tomorrow. I think it's June 5th, right? June 5th or 6th, can't remember. But pair those two together, and now you've got like the perfect storm. But I'll also say that, like, in periods of uncertainty is usually where you get the best deals, in my opinion, right? So it's like, once you wait 2 to 3 months to have this perfectly figured out, the market's going to start reacting as well, right? So I arguably think the next 2 months is probably the time to try and pick something up, but it's going to have a little bit of risk. Maybe you put some due diligence terms in there that kind of gets you about 2 to 3 months that you need, right? But
yeah, I mean, the risk is really offset by that. Offset by the timeline that you have, right? You never used to have these timelines. Like, there was never a 60-day due diligence period to go through all the numbers. Like, you were doing that in a week or 2 weeks and putting all hands on deck. Now you're just actually seeing CMHC deals that you can get with 80% financing right up front. Like, those deals were unheard of before, where the cap rates were so low and all the rents were so low. And like, those deals literally didn't exist. But now you're finally starting to see these types of deals. So to your point, exactly. Just boring real estate, right? Multifamily was meant for buy and hold. Wasn't meant to buy, flip, and do everything that we did with like the smaller multi, like the triplexes and fourplexes, where people just kept burying them. That was never the play in multifamily. You go tell that to somebody who's been in multifamily for 15, 20 years, they look at you like you got mud on your face or something. Like, they look like you're crazy. They can't believe what I'm even saying when I tell people, yeah, they bought the building, closed private, and refinanced 18 months later. They look at me like, what are you talking about? That doesn't even exist to multifamily.
So what type of buyers are you seeing? I know we talked about the MFTs and the private REITs, but like take those guys out, because arguably I think like most of our audience probably does not want to get into that complicated of a structure, that big of a structure, right? The average individual, are you seeing like 2 or 3 friends coming together? Are you seeing like people with strong active incomes that are just like deploying some capital into this stuff? Like what's a buyer avatar that you're normally seeing now?
Yeah, it's a good question. So who's actually buying right now? I would say people that do have strong incomes, right? They get a little small group together, 2, 3, or 4 people with strong incomes. Maybe it's in a separate business. Maybe it's not actually in real estate. Maybe it's in construction or something else, coming together and starting to want to build a multifamily portfolio. And I can tell you right now, all those guys are thinking exactly what I said before, just boring real estate, a place to hold wealth. They're going to put down a good sized down payment and they're going to wait the 5-10 years for the mortgage to run its course, right? And they're going to make their money that way. Outside of that, I'd still say there is a significant amount of people moving up from the residential space, right? They've got a good small portfolio of residential. Maybe they've sold off a couple properties. Now they have a little bit of capital to play with to get into the commercial space, because you got to remember, commercial starts after 6 units, right? So getting into commercial could still be them buying like an 8 unit or a 10 unit or a 12 unit in some of these markets, which is a great foundation for somebody trying to get into commercial, right? They don't have to jump right into 30, 40, 50 units. Getting something around that 10, 12 unit mark is a great way to understand kind of the commercial process, the due diligence, and really get your feet wet.
So speaking about due diligence and adding in longer clauses, I'm curious, during times like this, what unique clauses have you seen people structure together when putting in offers? Because again, like we mentioned, the past people were going clean, but now I'm sure you can play around with very unique conditions to minimize risk.
For sure. Yeah, I mean, the biggest thing to minimize risk is time, right? Giving yourself the time to actually go through everything. Outside of that, like vendor takebacks, a lot more sellers are willing to do vendor takebacks. I just go back to my earlier point where if these rule changes actually allow people to refinance them out, that's right back on the table. Because before that, it was like, great, a seller's willing to do it, but how does that really actually help me? Like, I still got to find a way to pay that out before I even get my refinance. Right. So the VTB conversation for like the last 8 months has always been so tricky when sellers are used to being able to actually like incentivize people with VTBs, where for a while there, it almost didn't even make sense for buyers to accept it, right? Unless it was going to be 0% interest and, let me give you some free money for the next 2 to 3 years.
And I guess another question on my end is there's a lot of people that are entering into the apartment space or have entered the last 3, 4, 5 years. We know that investors who got on the residential side, a lot of them tended to overextend themselves, and now they're in tough situations. Are you seeing something similar on the multifamily side, where newer participants have over-leveraged themselves? And do you see that making any sort of material impact on the industry?
I'd say yes. I'd say some people have overextended themselves, but I'd really only say it happened due to the rule changes. Like, I don't think any of them necessarily would have been in the same position if it wasn't for CMHC retroactively changing those rules to say we can't refinance out your private loan. Well, that was like majority of the people who bought buildings in that period bought with private loans, to refinance out the CMHC. So that rule change alone put everybody into over leverage, because then they had to go pay all the fees to get into a bridge. And now they're sitting in a bridge. And now the rule changes come out today saying, actually, you don't have to be in a bridge anymore.
Right.
I can't imagine. I'm not in any of those loans, but I can't imagine some of my clients feeling right now, hearing that you don't have to be in a bridge loan anymore.
No, it's extremely frustrating. I think I had a conversation with someone 2-3 weeks ago, not too long ago. And it was just like, hey, look, this is like what you can get with CMHC today. But like, the product, like MLI Select, I guess is a product, not standard, but MLI Select has really only been around, was it like 2022 or something? I think it came into play somewhere around there. And like, that's not a very long period of time for a product of this like magnitude, right? So like 2 years ago, and what it started with versus what it became, and now what it's becoming is completely different products, right? And they're talking about 55 grams and stuff like that, right? So, and if you have a 2 to 3 year timeline on some of these projects, but I don't really know what the product's going to be in 2 to 3 years, right? So that is essentially the biggest risk, I think. So it's a really good point. And everyone that bought in Alberta, I know that was a big move as well. For energy efficiency on pre-construction, it's going to be interesting to see how that kind of plays out as well now. And I know that was a big movement as well. So kind of related to that, I guess within Ontario, on a market level, like how are you seeing the commercial properties move? Like if we talk about Toronto commercial, versus, let's call it the 2 hour radius. So like London, Kitchener, Waterloo, Cambridge, maybe Belleville, maybe Barrie, and then versus like a 4 hour radius, and then anything beyond 4 hours, which is like Timmins and stuff like that. How are you seeing like each of these markets kind of move from a demand and supply perspective on commercial multifamily?
You know what? It's really tough to say market because every deal is so individual, right? Like all of a sudden you'll see a deal pop up in one market and it like sells like this. And it's just like right price, right building, good solid asset, right to CMHC, and it sells literally in a couple of days, right? Then you see another building in a great market, overpriced a little bit too much, rents aren't there, maybe straight to CMHC, the loan to value is at like 60%, 54%, and it just sits. Like they can't figure out a way to put the deal together and massage the numbers enough to make a deal. So it's so hard to kind of generalize by saying city by city, because it really just comes down to like that specific asset. Like put it this way, we have listings in so many different markets across Ontario. Every single one of them gets calls every day, emails every day, new leads every day. Like there's people actively searching on market, Facebook, calling us, asking us if we have product through all of Ontario. But it's so deal specific, right? Like there's some markets that would get called more often. St. Thomas is probably one of them right now. That's super hot in the news with Amazon and Volkswagen being there. There's a lot of people that have called us probably within the last couple of months and just saying like, I just heard about St. Thomas. Like this city looks great. Economics look great. How do I buy something in St. Thomas? And realistically, there's not a lot of product in St. Thomas, right? So that's just one example on a city level, a city that's kind of getting shown into the light. But outside of that, I'd say it's really tough to say. It's more deal specific, building specific.
Yeah, no, that's actually a really good point, because I think we're so used to, like, if you're used to like the duplex, triplex, fourplex, you could almost just choose one city and you'll probably have ample supply in that city to make the deal work in that market, right? But if you're looking for like 7 units up, okay, like maybe you've got like 2 or 3 in like a city like St. Thomas, maybe you've got like 10 in London, right? So it's not a whole lot of supply, and therefore you need to like really expand your geography, and you need to have a bigger radius, I guess, right? When you're kind of looking at these properties. Yeah. So I realized as well that we didn't actually talk about CMHC, MLI Select, or any of that stuff. I think most of our listeners at this point know what it is, right? But for anyone that doesn't understand, when we're talking about CMHC, it's not the residential side. It's basically very similar. It's an insurance product, but for the commercial side, that allows you to obtain a higher loan to value and a extended amortization for commercial mortgages. That's like the super like high level like Coles Notes version, right? And then there's MLI Select, CMHC Standard, and then there's going to be the construction side, which we're going to touch on next, right? So existing multifamily, I think personally, my opinion, super sexy from 2020 to 2022, 2023, with cap rates coming down. And then in my opinion of this, what's essentially happened is rents have gone up so drastically, and it's everywhere in the news that like, hey, like if I moved out of my existing rental unit now, I'm going to be paying like triple what I was previously paying. Yeah. And so tenants are now demanding a lot more in cash for keys, and they're just a lot more like knowledgeable, right? So I think that coupled with the government kind of pushing us towards building new supply finally, right, and trying to like incentivize it, I think has made construction and development a lot more attractive for previous like commercial burr investors, right? So what are you guys seeing on the land and construction side right now?
Yeah, it's a great question. It's a good leeway into it. So typically development makes up a good portion of our business. And over the last, I'd say 6, 12 months, it really has been slow, like really slow. Condo sales not selling has been a big driver of land kind of sitting. A lot of projects that were, call it site plan approved for condos, are now having to rejig it for rentals. And really the cost of construction is still at a point where deals just aren't really penciling out all that well. Even with CMHC, and again, land, when we're talking about purpose-built rentals, it kind of gets cut up into a couple of different sections, right? So we can talk about like the small mid-rise walk-ups or anything like 3 to 4 stories. Then you kind of get that next jump up to where it's like, call it 120 units to like maybe 200 units where, you're a good size building, but you're not at that high rise level yet, right? And then the high rises are probably anywhere from like 250 plus, right? In terms of unit count. And across all those sectors, I'd say the one that's probably doing the best is the low rise kind of smaller term development. Right. And really the reason why is because there's a good amount of small developers who are putting together, again, GPLPs and trying to take on these buildings to kind of get their feet wet into the industry and take on a good sized project. That middle size is probably the slowest, because that's kind of where those small developers that have already made that jump to mid probably have projects that are stuck, or maybe that they overpaid for in 2022, or maybe that, again, the numbers just aren't checking out the way that they thought they were. So their pencils are all down. They're not really moving. And then the big guys, you still have one or two of them still tackling projects that are just machines at this point that can't miss. But a lot of the big players also have their pencils down at this point for development. So it's really tough sledding out there.
Are you finding most of them are doing purpose-built rentals, as you mentioned earlier, as opposed to actually like condominiumizing units and selling them off? Is that correct?
Correct. Yeah. Some of them would have already got the projects approved for condo, but before they went into pre-sale, all of a sudden they're realizing that, hey, this project and that project also isn't selling. Let's turn this into purpose-built rentals and try to now build this as purpose-built rentals. But you guys know the capital needed to do that is so drastically different than doing purpose-built condos.
And it's an interesting point that you mentioned that. So Benjamin Tal, who's CIBC's chief deputy economist, he mentioned, I think it was like 2 weeks ago, same thing. He sort of brought up that no developers are really building to sell right now because there's no demand for people buying it, and people aren't buying it, and you're not getting financing on these projects. And so while and of course, like there's a lot of condos sitting on the market. So while you're seeing right now that there's a huge amount of condo supply, in 5, 6, 7, 8, 9 years down the line, people are going to pay for that, right? Because yes, there's a surplus at the moment, but because of the last couple of years, people aren't necessarily building to sell condos. Now you're kind of stuck in a situation where supply takes a few years to come on the market, and that will eventually lead to an increase in prices in the future, but just not immediate. I'm curious to hear your thoughts when you were talking about developers not really playing in the mid-sized purpose-built rental. Is there any particular reason why? Because I would think economies of scale, when you build more units to rent out, should be better, right? The land acquisition is probably cheaper from a per square foot basis. The cost to build maybe would be cheaper if you get better pricing, labor pricing, materials. So why is that the case?
Let me preface this by saying I'm not a developer or a builder. This is just what I'm seeing from my clients and from talking to clients in these types of deals. So basically how I'm looking at it is the small deals you can still build with wood, which is way cheaper than concrete. Concrete right now is the most expensive thing with development. That's the first thing. The second thing with these smaller deals is typically you're avoiding elevators, you're avoiding underground parking, or you're avoiding any like major environmental concerns, shoring, or anything like that. In those mid-sized deals, typically you have all those things. You're concrete now, you have elevators now, sometimes you have underground parking that you have to worry about, which just increases your cost so much. And then what you just mentioned, the economies of scale only really make sense when you're over those big deals. So those mid-range deals still have all the same things that the big deals have, but they don't have the economies of scale of the big deals. But the small deals actually miss out on a lot of the tough things that end up driving up your costs really expensively.
It's essentially just like, look, like if you want to go into like building like I guess there's one project we're looking at right now where you could in theory build like 36 units, or I could just build like 9 plexes. And like the reality is like, obviously the 36 units is going to be worth more. It's going to be cheaper to construct. But when I look at risk with today's like rates and like holding costs, like holding a 36 unit like budget, even if it's like $5, $6, $7 million, that's significant. And if it goes over like 1, 2, 3, 4 months, like that starts to erode margin drastically, right? Versus like a more risk controlled approach of build your 9, stop, finish, refinance, pull out, build the next 9, right? Until like, you know, if rates start to come down and your holding costs drop drastically, that's different. I think that's what Zac was alluding to as well before, right? Like a lot of small developers that have moved up into the medium-sized game, like they're now getting burned with like even just changing an SBA, because I'm client right now is changing SBA from 60 condo units to 60 rental units, and that's like taking her like months to kind of like go through that process, right? And every month you're now like holding, right? And you're just trying to like hold, and like you're essentially just taking on debt to like make more interest payments, right? Which is the unfortunate reality of it. But I am seeing that like a lot of them are building stuff that can be condomized in the future, right? And we've talked about this even with the 4+1s in Toronto. It's, you know, build it to conform with current zoning and stuff like that. But we're probably like 4 or 5 years away from them allowing us to, or I think you can already do it technically, but it's not like it hasn't been like proven out and stuff like that. But in a couple of years, like eventually you'd be able to sell off each of those individual condomized units, right? So with land and development, like, are you guys seeing that it's popular in some cities over other cities? I know a lot of people really like the Niagara region, but is there anything else that you guys are kind of seeing for development? Let's define this for like our audience. I think personally, our audience is predominantly going to be looking at developments like under like 15 units, right? So people that have been doing like triplexes and fourplexes that are comfortable deploying like 300K worth of capital are now maybe looking and going, okay, I could deploy like 500 to 600 with some construction financing, maybe do a build for like $3 million or something in that ballpark, right? So with that in mind, like, where would you recommend they start looking?
Yeah, I'd say the Niagara region is probably the best value you're going to get. The best cities to work with typically across the board, and they're probably going to be the best value you're going to get. Second to that would probably be looking at like Brantford, London. Those are two good markets that you can still find good deals for land to go build kind of that, call it 10 to 15 unit type of building. But those are kind of the regions that I would focus on the most for doing like a 15 unit. Outside of that, Hamilton's tough. You know, they're land capped a lot and all the land values are getting squished up. But the zoning changes that we're seeing now come from the government are making a lot of this way easier, right? Putting two lots together. And like you said before, even if it's 2 9 units side by side or 2 6 units side by side, then now all of a sudden you have the 12 units on these two properties, like that's getting easier, right? So the government's doing some good things in terms of helping with infill development and making certain things easier. It's just about making the numbers pencil out at the end of the day.
Yeah.
Right.
Yeah. Mm-hmm. One last point on something you said earlier as well, kind of just, I think Austin or I don't know who said this, related to kind of the lack of supply. I think we saw this in, was it the 70s or the 80s or something like that, where you just had like in Toronto, all these like massive apartment buildings. Nothing was really built like post 1990 really, other than condos, right?
Yeah.
But pre 1990, you have like a bunch of these now like 40, 50-year-old apartment buildings that were built because of a lot of government regulations that made it easier to amortize your buildings and take deduction against your other income, right? So I think the regulatory changes is going to drastically change the supply side of this equation, right? But it'll be interesting to kind of see how things pan out in a couple of years, I think.
Yeah, exactly.
I wanted to hear your thoughts. We had Henry on our podcast, and he was talking about, which is pretty interesting, is instead of developing from scratch, he takes existing shells of whatever. It could be like a church. So he's doing a church conversion. But also he'll take existing apartment buildings and let's say it's a 2 or 3 bedroom and he'll chop it up into studios or 1 bedrooms. Of course, you would have to negotiate vacancies. Have you seen popularity in that strategy growing, or do you know any clients who are implementing that?
Yeah, I know a few clients that are doing different types of conversion projects like that, even taking office commercial space, turning those into residential units, right? Depending on what city you are and depending on where it is in the downtown, some of them you might still have to have a commercial storefront, but converting the back of the commercial space into residential, everything else into residential, a lot of times cities are pretty open to it, right? Most cities are looking to increase the amount of rentals they have. So taking, especially the old kind of commercial spaces and converting them. I've seen somebody do a motel conversion. I just saw that big property out in Trenton, completely converted, a huge 73 unit motel, converted all into apartment units. So all 73 bachelors. So there's definitely some good opportunity, even in the industrial space, taking an old industrial building, converting the zoning, allow you to do residential. Like Toronto's very, very popular with doing that, right? Like all their industrial land has all been converted into like really beautiful loft space. And those condos or apartments end up renting out for a lot of money.
Yeah. Especially, I think it's like Tip Top Taylor. That used to be a warehouse, couple of places in Liberty Village. I'm curious to hear, with these sort of conversions, commercial into residential, what's that process look like? And is it like a fairly straightforward process, or do you have to go with a long battle with the city?
Yeah, it's deal specific, right? The main thing is going to be zoning. Are you battling zoning to get a zoning amendment? Are you just getting a minor variance? Basically, that's to determine how much of a battle you're going into, right? A zoning amendment can be 18 months, and I haven't heard much people getting it less than 12 months, right? A minor variance, a lot easier, right? Now you're talking 2 or 3 months.
Gotcha. So most of the target is around the minor variance. People are not looking to get anything rezoned.
Yeah, exactly. Because probably to Henry's point, once you strip everything back to the studs, you're just working with a wide open space, and you can do whatever you want. But it's really that zoning process with the city that is getting better. But again, it's zoning specific. Depends on what street you are. Depends on what city you're talking to. that can make some of these projects really attractive or really unattractive on the opposite side of it if they're not flexible.
And I think the last thing I'll quickly add in there is I think there's also been a lot of zoning changes in multiple cities, right? And so I had a client that picked up a duplex, and like no one had realized this property had been rezoned for like a 7th floor like apartment building, right? I was like, yo, that's pretty crazy. I saw the same deal and I just completely ignored it because it looked like just like some really like duplex, right? So I think people that know the zoning and know the changes, and contrary to our answer on the commercial buildings where you've got to have like a wider geography, right? I think really understanding the zoning specific changes in one locality can help you find really good deals to kind of deal make that way, right?
Yeah, just to jump in there, because it's actually a great point, and I made this point at a development conference last weekend. I told them there are a bunch of developers all looking to get into it, kind of like from starting to mid-range developers. And I said, you as developers need to hone in on a neighborhood. Get so specific that you know the exact lot size you need to do your development. You know, you already know the zoning, you've already done all the due diligence. You're not really coming to realtors to do all that for you because you know it better than anyone else knows it. Like, you're the developer, right? You're seeing that opportunity of just a single family home and knowing exactly what you can put on it. Like, that's your advantage in the market. So I think to that point, be super specific if you're looking to develop in real estate.
Right. Before we get into kind of your portfolio, because I think the resorts and the campgrounds are something that is definitely very unique and we should definitely talk about. I just want to quickly talk about like industrial storage, some of the other like less talked about commercial asset classes. I know industrial had major cap rate compression during COVID, just like everything else really. Storage about the same as well. Are you seeing a lot of traction in those asset classes still to this date, or have they kind of like teetered it off a little bit? What kind of changes are you seeing on that side?
I'd say the heydays are over with industrial, where everybody was doing deals and cap rates were great. Like you said, they got suppressed. Everybody's looking at those deals now, so the competition's way more stiff. And sellers of those properties all know that, hey, everybody now wants me, so I can actually increase my prices across the board. And that goes same for leasing and same for the sales side of industrial. Like, those prices have all gone really high.
What is the attraction of industrial investing? I have no idea. What's the value add?
It's industry specific. Yeah,
it's a little bit loaded question, but like my understanding of it is in the beginning of COVID, where you started to see a lot of migration towards like the Amazon era, right? Where like now it's all like retail is dying or like relatively dying depending on the type of asset class, right? But Amazon and like self-storage or storage facilities for large like distribution centers started to like increase in popularity. You needed more and more and more space. And like think about how fast Amazon is putting up some of these like industrial like buildings, right? So I think that started to jack up the rent rates for industrial buildings, which then resulted in their valuations just essentially going drastically higher. That's my like super high level understanding of it.
That's a perfect explanation.
It's more so supply and demand than value add, I guess, is what it sounds like.
It's supply in specific locations, right? Specific locations that these trucks can get into, where, you know, you have a central hub and you can supply an entire region thanks to like having that industrial space in that specific area. But it's very hard to go buy brand new industrial space in like gated locations and build a brand new storage facility.
Which is crazy because like it's so cheap to you would think it's cheap to like build these things because they're really just shells. Like there's no kitchen, there's no bathrooms, there's like it's just a shell that's being rented out and you've got triple net leases on them. So but it does require a lot of capital and lower loan to value mortgages and stuff like that. So it's a different like buyer or investor that's doing it as well, right?
Exactly.
So it's kind of jumping ahead here. So your portfolio, the retreat, the campground, why did you go that approach? How did you go that approach? Like, what's the story back there?
Yeah, it kind of got sent to us as a campground up in Tulum, and we always had this vision to do something really cool, something really unique, and saw an opportunity with this property to remove the long-term tenants on there who are just on a contract basis year over year. It was legitimately, we were paying $2,000 a year to have their trailer on this site for basically, call it 7 months. Right, we said, what if we can put up some of our own trailers, our own Airstreams, our own tents, charge, you know, $200 to $250 a night, and end up running this as a short-term rental business instead of the old school kind of campground. You bring up your own tent, you know, you bring up your own trailer and rent a spot for like $50 a night. So it was really just kind of seeing this property, loving the whole Bruce Peninsula area. Like if you guys have never been up to Tulum, please take some time this summer and go up there. The water is crystal clear blue. You can go snorkeling, you can go see shipwrecks. You got Flower Pot Island up there. It's a gorgeous area to go hiking, and really seeing this property is on 90 acres, and looking at the potential of what we could do with the short-term rental space and kind of create that vibe that we're looking for up there.
And how did I guess when you bought the property, what was the game plan immediately? I mean, when you have these contracts and all of that in place, I imagine there's going to be a pretty substantial holding cost when you cancel all of them and, start having to put the construction things together and have it operational again. How did that process look like? And when were you able to stabilize, if it's stabilized already?
Yeah, good question. So we kicked everybody out right away. Luckily, those contracts were written in a way that they had to renew every single year. So it's not like somebody was on there for 5 years that we had to try to pay out. It was every year. If you didn't get those contracts signed, by the time the season starts, you're out.
Yeah.
So that was great. And at first, we really just had to go in guns blazing. We built 5 of these decks that we put these bell tents on. We bought 3 trailers, had a 4th one, bought one of the trailers off somebody that was leaving it on site. So we got a great deal on it. They're like, can't move it. What do you guys want to give me an offer for? So we just gave them an offer, ended up taking it. So it was great. We got another trailer on site. And it took us probably about 2 months at the very beginning to get open to the point where we could actually have guests start coming. And a lot of it, honestly, Austin, was get the money in, bootstrap, start earning income, take the money, go buy more tents, go buy more trailers. And we really didn't get fully stabilized until about 1.5 years in, I'd say.
Wow.
Right?
Okay.
RBC removed our financing about 1 year in. And I'd say probably about 1.5 years right after that is when we were, I would say, fully stabilized.
Did you say they removed your financing?
We refinanced that with RBC. We had to buy it private, obviously, because, not removed, refinanced that with RBC.
Gotcha.
Obviously, we had to buy it private. The numbers we got were chicken scratch on a napkin. All that stuff was done in cash. So once we could show almost a full season of what an Airbnb revenue could do, then RBC could kind of see the vision that we were going for, and ended up giving us financing probably about 1 year sooner than we actually anticipated them doing so.
Is it 50% loan to value usually at RBC on resorts?
This one's actually 62% loan to value.
Solid.
So they gave us really attractive.
Yeah. I will say that's pretty impressive considering that you said the first 1.5 years is stabilization. So I imagine the first 6 months or so, you guys probably weren't profiting, right? So they really looked at less than 1 year financials to loan on you. What did you guys do to convince them? Because the banks don't like to loan on new businesses.
No, they don't. It was really just a fantastic business plan and a fantastic business model, just showing them how much, put it this way, a $20,000 tent investment could generate $25,000 in revenue every single year. Right? So it's they saw that we did that over 5 tents. We did that over a couple different trailers. We showed them the plan on where we wanted to add the next tents. We had to get another 4 gazebos lined up. We had more trailers coming. You could also finance trailers for very cheap right now with 0% down, 6% interest, bi-weekly payments. Put those on site and we're able to rent them out for a lot more money on a nightly basis. So they just kind of saw the vision, right? We put together a nice package. I think having a really good website, having a really good Instagram, doing a couple different giveaways, getting a good following there, helped kind of build the case on what we were trying to do. Tulum and that whole Bruce Peninsula is also all over BlogTO and all these different news places of the place to travel in Ontario. So I think there's honestly a lot of factors lining up for us in the right direction.
Let me ask you this. You could definitely load it up with as many glamping sites and trucks as you want, but there's going to be a point where as a guest, my neighbor is another truck or another glamping site just a couple steps away. This is not the vibe I'm going for. Did you run into any hurdles or obstacles where you guys were just loading a bunch up and there was not enough space between? And if you haven't run into it, how much do you realistically add until you say you maximize the usage of this land and there's not much more you can?
It's something we always think about, right? We market ourselves as a quiet, peaceful escape up in the forest of Tulum, right? And our staff is adamant that 10 o'clock, there's no more noise. Everybody's by their fire, peaceful. It's a really, really relaxing setting. Luckily, we have 100 acres. So most of our development now has probably been up on about 12. And the rest of our expansion plans is basically going to be how do we cut into the forest and go put a tent in the middle of the woods, right? To be super
Super isolated.
Super secret, super isolated. Like right now, it's kind of like a typical campground where everybody can somewhat see each other, but there's lots of trees, there's lots of noise protection, there's no loud music. But the next kind of phase of our expansion is like, how do I put Mayu in the middle of the forest where he's, 5-10 minute walk away from civilization, right? And how do I create an experience like that?
I think a lot of the cottage property owners that maybe have a cottage on like 3, 4, 5 acres of land could possibly do something very similar, right?
Yeah.
But do you need to essentially run like, you're not going to run plumbing, but like, do you need to put in like a septic tank for like every like tent or like something like that and build a little outhouse for each? Like, how does the bathroom situation basically work for these things, right? Like, is it expected that everyone comes back to the central one, or how's that work?
Yeah, so when I'm thinking about going into the forest, I'm thinking like fully decomp toilets, rainwater for showers, like really trying to go off the grid to kind of give that experience where it's like, hey, in the morning, if you want to walk over to the main shower building and take a nice hot shower, you can do so. But outside of that, if you want to really feel like you're in the woods, you have everything you need at that space to give you like that full immersive experience of like, yeah, there's no civilization around me, right? Do you guys know what portaging is? Have you ever heard of portaging?
Like a canoe that you like go off onto like an island.
Exactly.
Yeah.
I want to do like the baby version of that, right? So it's like, hey, come to our site. Here's a map. There's your tent. It's in the middle of the woods. Go find it, right? That's the baby version of what portaging really is.
Interesting.
Like an intro to it.
Yeah, that's definitely pretty cool, I think. So how did you guys go about on the purchase? So you said you leveraged some private financing. It was yourself, Andrew, and you guys had someone else as well, right?
Yeah, myself, Andrew, and 2 other business partners.
So 4 of you guys.
Let me just put an asterisk there. If anybody's looking to do glamping or campground, make sure you have some solid business partners. I don't know how I would do it without those 3 guys. We all have our areas of expertise, and there's a lot of work that goes into owning a campground compared to just owning an apartment building or a duplex or triplex. So
that's exactly what I was going to ask. It's kind of like the team and the expertise. Like, did you guys have someone that had previously done this before? And if not, like, how is the team like structured? Like, who does what? Because there's marketing, then there's like customer experience and like operations, then there's like the selling side, then there's the development, right? So it's like, who's really doing what, and how's your team kind of structured in terms of expertise?
Yeah, there's a lot that goes into this, right? And you really just have to find partners who are good in areas that you're not good in, right? And that's really what we did. All of us kind of have our own silos in terms of where our experience lands, what we're good at, what we're not good at. And we've all found our lanes over the years in terms of like, okay, Zach, you're going to take care of the Airbnb backend, make sure all the listings look good, make sure guests are getting messaging. My fiance actually takes care of a lot of the marketing. Andrew right now is taking care of a lot of the numbers and a lot of the bookkeeping and a lot of the backend in terms of that. My other business partner, Mike, is way more of the hands-on guy who he's going up there probably once every 2 weeks, once a month, very mechanical oriented, right? Able to fix little odds and ends whenever we need it. Right. And then Jacob also is really good too in terms of helping us with like the overall development scheme, in terms of the environmental and kind of big picture where our expansion plan's happening next.
Listen,
So it's been good, but have those conversations up front. Don't have them a year, 2 years in. Have that up front.
I guess from an employment point of view, I mean, it's for sure. From a business point of view, high level, you need someone that specializes in a specific niche. On a day-to-day operational level, assuming you guys are not operating it from a day-to-day perspective, I imagine you have employees.
Correct.
If so, what type of employees did you need to put in place?
Yeah, honestly, we put out our ads there looking for somebody to live on site 24/7, right? Like we needed campground operations managers, somebody who's been in that space before, who want to live up there for the entire season, who's going to take guests as soon as they check in, who's going to show them their place, who's going to manage the cleaners on site. It is basically going to make sure the site looks pristine anytime somebody comes on there, right? Make sure all the washrooms get cleaned and make sure everything looks tip top. And we found 2 rock stars up there. So they've been really good for us. They've been with us since the very beginning. And they've really helped us maintain our high standards, which help us on our Airbnb reviews, which help us on our Google reviews. The customer service that they have is unmatched out there. So it's all about finding good people, right? Like in any business, like you really got to find your people and stick with them and help support them in any way you can.
Gotcha. And from a marketing point of view, and the reason why me and Maya are asking these questions is because we actually at one point locked up a resort.
Yeah.
And nice. It was much different than what I thought it'd be. Immediately, like, oh, let's Airbnb everything. That's the only thing you need to do. But When we spoke to the resort owner, that's not necessarily the case. You got to build the relationships with nearby amenities, things to do, et cetera, et cetera. So what are you doing in terms of sales and marketing? And are most of the bookings through Airbnb or through some other method?
Yeah, without giving my fiance a lot of credit, hard not to. Most of our bookings honestly come direct, like right through our website, right through Instagram, right through TikTok, and like those types of marketing efforts. We still run Google ads, we run some Facebook ads, some Instagram ads, but a lot of what we do is influencer marketing, bringing up people with good followings, doing giveaways, doing different types of outreach like that. And the amount of traffic that brings to our site is unmatched. Like, we haven't found anything that's better than doing that right now. Airbnb still takes a good percentage of it. I think they're probably sitting around 35 to 40% of our bookings. Booking.com takes another, call it 10 to 15. But really, our website does the majority of our bookings at this point, which is just incredible, being only our third season in the business.
Yeah, that's essentially what you want it to be, right? Like, you want it to be growing more on like your own platform and like attracting people, but you need like scale. Because I think like some people with like I've got one cottage, and like, does it really make sense to kind of go that approach and like, build out a website? And it's not some super luxury like cottage either, right? Versus what you guys are doing is completely different as well. It's more of a standalone business, right? So Zac, I think this was a great episode. We've covered a shit ton of content here. We literally did a full breakdown on all commercial asset classes, and I ended up with your own experience on the resort side as well. So I think it was a great episode. Now, for anyone that's looking to get into this world of, let's just call it commercial real estate, right? What's the main piece of advice that you have for them? Or like, if there's any kind of major risks that you see for them, like, you know, what is it, and what would you like to share?
Yeah, I think we've covered a lot of it, guys, right? And if they couldn't decipher kind of what I was saying throughout this entire time, I think, guys, multifamily commercial real estate has always been low risk. It's been over the long term. It's buy and hold, wait 5 to 10 years. You know, these programs look great. They look shiny. They're fantastic. But at the end of the day, what everybody knows is true is buy and hold multifamily real estate will make you money in the long term, right? It's one of the best asset classes in the world for that specific reason. So try not to get too fancy with it. Don't overcomplicate it. Get the money, buy and hold. Nice and simple.
Awesome. And the second question is, where do you see your business evolving in the next like 2 to 3 years? And we could answer this from like a commercial perspective. Like, what do you see as being like the most popular kind of like sub asset class within commercial real estate?
Yeah, so we continue to build our multifamily team. Myself and 2 other business partners. We now got 3 other agents on our team. We're continuing to build it. And really want to help cement our name in the multifamily commercial space in Southern Ontario as one of the leading teams out there. So that's how I see that side of the business improving. And then on my personal investing, I want to continue to buy outside of Canada in places like Mexico, maybe the United States, and just continue to buying short-term rental assets that have unique experiences that people can get excited about going to.
Yeah, awesome. Really appreciate all of the golden nuggets that you dropped throughout this podcast, Zac. It's really good to get a sort of high-level understanding of what's going on in the commercial space. And you're absolutely right. While we talk about some of the trials and tribulations going on now, ultimately, real estate, it's not even multifamily, just real estate has always been a long-term buy and hold. But I think we've been spoiled. Exactly. Myself, definitely. I've definitely been spoiled from when I got started investing to now. That my expectations are out of whack. But when you look at it from a 20, 30-year perspective, you are likely going to get wealthy off of real estate as long as you just buy and hold. Anyways, if people want to follow your journey, connect with you, learn more about the commercial side, how could they best get in contact with you?
Yeah, Instagram is probably the best way. Just my name, @Zac Willms. They can DM me there. Happy to have any conversations with any of your listeners about commercial, multifamily, or glamping resorts, whatever it may be.
Awesome. And if you guys enjoyed this episode, make sure to give us a follow, like, share with a friend, comment. It helps bring great guests like Zac onto the podcast. And until next time, everyone, invest smarter and live better. Take care all.